Hello, fellow investors. Welcome back to our channel, Wall Street Station. Thank you very much for popping in. Today we have an exciting topic that's been on everyone's radar. After earnings, we have just been delivered with the new report of AMZN stock. So whether you're a seasoned investor or someone just starting to explore the world of stock market, that's a video you don't want to miss. So there will be many thought-provoking types of content. Also, we guide you through the fundamentals, technicals, sentiment of a stock. So that's everything right here. So AMZN is this e-commerce juggernaut turned global tech giant that has not only revolutionized the way we shop, but also become a cornerstone of digital age with this AWS platform that bring in more and more profits for the company. So let's right now dive into our presentation. So in this video, we're going to dive deep into AMZN as an investment opportunity, and we'll ponder about the question, is AMZN stock right position to grow from where we are right now, regarding many of juxtaposed elements. So if you are looking to make informed decisions about your investments or simply wanted to just find out what's about the updates around AMZN, you just hit the right address. So right now we are jumping to the first element. As a reminder, we are live, so if you have any burning questions, you may pop it right at this the window that is just projected to your questions right in the box. All right, so what the AMZN is offering right at the beginning, we'll just jump through the most important elements of fundamentals with this octopus distribution. I've just changed my pen to the laser pointer to make it more visible. So AMZN business model is multifaceted and it's very dynamic indeed. You can find right here AMZN.com. So that's online store, physical stores, third-party seller services, subscription advertising with AMZN advertising and Twitch, AWS, and also other. So you can find right here that there are many elements that encompassing a wide range of services and functions, and among them, in the most crucial one that I find is this a marketplace that's AMZN platform allows third-party sellers to list and sell their products, expanding product selection and enabling small businesses to reach a wider audience. That's the one thing that we do know that AMZN is working on, is this boosting the sales and also the profit out of this sector, but also, as I have mentioned, as AMZN is entering the digital age, that is making it with AMZN Web Services. That's one of the most remarkable and a kind of a hallmark of the company. So right here you can find the revenue out of this segment, and AMZN's cloud computing division provides a wide range of cloud-based services to business globally, contributing significantly to the company's revenue. So also it has entered the TV type of a segment with its Prime video streaming service. It competes with other platforms offering library original and licensed content. So among others, there is also some of the things that I will point out in other slides. So just stay with us. And if you're enjoying that type of a content, just hit this like button. That will be highly appreciated for now. So aside of it, something that also adds up to other type of elements, that's acquisitions and investments. So AMZN acquires companies and invests in startups to expand its presence in various industries, among Anthropic that I also have covered in the previous episode, but we'll just talk about it later in this episode. So what about the earnings results? So Amazon is a dominant force in e-commerce and cloud computing, but when it comes to its product of AWS, it has slumped during 2022, what we can find right here. That is anyway a very competitive landscape, but as we do know that this grim landscape of economy has weighed on other companies, not only the Amazon but also Microsoft with its Microsoft Azure and Alphabet. That's something, however, that's worth pointing out is that right now this growth of AWS is right now stabilizing after this drawdown. But when it comes to the most important element of earnings, we can find right here that that's a breakdown of this earnings of Q3 with updates. So we can find revenue is right now growing very steadily, and it means that we are right now kind of resembling the pattern of back 2022 when it was rising throughout quarters to come, and with fourth quarter there was a highest type of a outstanding result. So that's why the proponents of and also some of the greatest fans of Amazon is finding that this pattern may also repeat in 2023, but the stock is falling. So it means that that there is a minority type of investors, otherwise they wouldn't sell the stock right before the fourth quarter of earnings. So right now the Q3 results exceeded expectations with a 13% increase in revenue to 143 billion and net income of 9.9 billion. So it means that also is rising. EBITDA is still yet to be updated right here on this graph, so I don't have it for you, but we can find right now that Amazon is the stock that right now, even though the world is shattering, even though there's some of the geopolitical problems, we may find that this company is just predestined to grow. Amazon projects Q4 revenue of around 160 to 167 billion, in line with expectations, but analysts are monitoring right now a consumer spending that may eventually bring this valuation lower. That's why the stock is on the way to seek for a little bit lower flow, maybe before another rebound higher. For that being said, right now let's compare Amazon with its peers. So there are some outstanding numbers in relation to other companies, and with advertising revenue we can find right here that Amazon advertising is maybe not as high as it's for Google or Meta, but it's rising steadily. Maybe this pace of growth is a little bit slower than for Meta or Google, but right now it's still yet to catch up, and supposedly with next quarter, with fourth quarter, when this Amazon advertising segment is about to get strengthened, we may eventually have reshuffling in this chart. Another kind of interesting juxtaposition is this revenue, and in this revenue we can find that there is a real front runner among others, and right now the Amazon is catching up the backlogs of 2022 very heavily, and this current trajectory of growth is putting an upward pressure on the stock valuation. That's why we had this great rebound from Amazon, even though the Meta has increased more relatively to Amazon in terms of market cap in this 2023 year period. Right now we can find that Amazon is still a little bit more like meandering along, and supposedly preparing for another monstrous rally ahead. So that's what I just find as possible. But what does the future hold for the stock is right here, just depicted. Maybe let's right now let's at first find out what's with the revenue and earnings is projected for the company. So right now, majority of metrics is about to get higher with the greatest pace out of the revenue. So we do expect that 2024 will be the one of the more upward tendency for Amazon, even with a kind of a acceleration to the upside. So even though we are expecting some reverberations in the economy, right now it looks like the Amazon, this is behemoth in terms of marketplace and also digital type of a company, is right now at an unshaken position to thrive. When it comes to directive long-term bias, we can also find it this visualization of where the company may eventually get us to in 2024, in 12 months from now. It's average 1 year price target with a kind of a doldrums around 2024 and first quarters, but after the presidential election we may see another rise higher. When it comes to its latest updates, for the Amazon, we can find that Amazon is betting very heavily on better technology to enhance inventory management and all the processing. So it's aiming for a 75% faster storage of inventory with this robotization that's coming to the company. So right now we can find that there is a long-standing automation investments which include robotic systems for packaging and cashierless retail robotic. So that eventually may get us to the point where this human workforce, this human labor shouldn't be needed anymore, but it's still yet to come, not maybe in this decade, but the world after 2030 will be kind of even more interesting than right now. So there will be supposedly the inevitable clash between robots and human. And so right now very interesting update is around this Project Kuiper. That's an initiative to increase broadband access through constellation of satellites in low Earth orbit. So the Amazon goal is to provide fast, reliable, affordable internet to unserved and underserved locations around the world. So the Amazon explores right now the possibility to enter the cosmic type of a endeavors, and it may eventually succeed. As we do know, the Jeff Bezos is really thrilled when it comes to its cosmic challenges. Amazon, however, on the other hand, after these positive revelations, is becoming a subject of a suit. So that's a legal battle against Amazon. So FTC sues Amazon for illegally maintaining monopoly power, and that's what we have found is that FTC files antitrust lawsuit against the company alleging monopolistic practices. So Amazon faces accusations of stifling competition and inflating costs for sellers. So the lawsuit reflects a bipartisan push against big tech. So it's not only directed to the company of Amazon, but also other type of companies we have also covered yesterday. The Meta, right now, that's Amazon. We also heard about Google. So there is a real storm over those large giant tech companies, those magnificent seven. That's many of not only legal type of entities, but also the competitors are trying to cut off those wings, these technological wings of these greatest companies in the US history. So right now, Amazon, after this news, has experienced a 4% drop following the announcement, but we do find that there is more likely that's a temporary that may result in some temporary shockwave, and we are still awaiting the outcome of the issue and the proposition out of the Amazon company. But in order to sort this out, but for the time being, I do find that the US won't just stave off this cash cows that's Amazon, Meta, or Google is. That's why some of the reconciliation in the topic should be available. Right now, let's head on to macro, as we do know that the stocks are not revolving around just numbers in the company itself, but in order to find out the best position to enter the trade or investment, we need to know what the macro is to predict what the next quarters might be for the stock. So right now we are revolving around recovery, expansion, even more leaning toward this expansion phase of a economy with the latest GDP growth. So right now, however, as we are believing in a very positive outlook for the economy, every company, what we can find right here, every company that is really letting down investors is sold off very heavily. So right now, even though the analysts' expectations have been met, it means that it might be not sufficient in order to maintain the current valuation of a stock. That's why we have really become a little bit too ecstatic around the stock market, and that's why the kind of discounting effect may eventually take place. Maybe it may end up with a Black Friday that is coming on the way, but we still have the fourth quarter. So anyway, that should be maybe a V-shaped type of a recovery, with even those sell-offs being worsened in the October and beginning of November. So earnings season has left much to be desired for now, as typically economically sensitive stocks have held up well against a difficult backdrop, begin to creak under the pressure, but those largest stocks are right now becoming and showing much more resiliency. So economists right now looking still to this treasury market for clues about when a recession might come. Specifically, they examine the so-called yield curve, and right now it looks like it should become and more obvious that it may, the more turbulences in the economy may take us somewhere between the presidential election. So the stock market might be ready to rally a bit more strongly after these bond yields will get sharply lower, and that may be just after the fourth quarter, maybe the post-election type of a period. So we need to just observe each cycle. Right now we are in the interim around recovery and expansion. So as every cycle is different, right now we have this favorization of technological stocks, but maybe it got overbought. That's why we need some kind of a realization in terms of prices. So right now let's head on eventually to our technicals, and for this I will just let you into our trading view, and Amazon is right now after the break of this widening wedge, and it's normally a structure that giving us a hint for a further sell-off, and with this rebound and retest of this lower band of this pattern, we can find that the next leg should be the one that is the heaviest. Right now, with this daily type of a sell-off, we have another possible stop around 114, and the extension for this pattern for the sell-off is right at the 111. So it means that the objective for with regard to breaking this pattern lower, giving us a hint that the possible stoppage should take place around 111. And it comes to weekly type of a scenario. Right now we can find that there is another important demand zone within the 105. So if we won't manage to just hang along at this around 110 levels, it will be a 105 that we may eventually get a stop right there. So it's around 10% lower from here. But when it comes to monthly type of a chart, we can find it even though we engulfed these two previous monthly candles, we are nothing far from nothing close to becoming more bearishly positioned in the long run. We are finding that there is a very specific order block within 105 and 109 that should give a stoppage to this sell-off, and then supposedly if we just maybe mark the possible tendency, there's an inverted head and shoulders being marked, and that's very powerful pattern indeed. So I do expect that may happen eventually. So this 105 is the possible support with an extension to 103, but right after this type of a trajectory should be played out. So that's very interesting how it all works out. You may just point out your thoughts in the chat section in order to make me get back to this. So right now, as you can find, we are at the very low sentiment around extreme fear, but still in this fear territory. So it means that's normally a good time to buy stocks. But for Amazon, as we haven't really noticed any type of reversal patterns yet, or very particular breakout, it's normally a better time to just hang on, even though we are in seasonally very crucial positive quarter to buy the stocks. For the time being right now, I do find that Amazon should give us another hints for accumulation. Otherwise, that would be kind of dangerous to catch these falling knives when it's sending a real technical shockwaves. Right now, when it comes to options chain, it's also crucial. I wanted to point out that the highest open interest on Amazon is right at on puts, right at 130, and when it comes to calls, I've just depicted to you the most important field by scaling. So for calls, that's around 130 indeed. So it meets in the same field. So it means the 130 is the one that given us the most crucial interest. And when we just get back to the chart, it looks like on the options chain that are maturing in a week, the 130 is the most expected price to trade at. So it means it's right now skewed to the upside. But if we just find out that right here we have just broken out very heavily out of this zone of 124, that's very unlikely to make it return. But there is a kind of a willingness to trade the stock around this level. So that's where the stock may eventually return, and the buyers may step in order to push it forward to 130, maybe in the November itself. The second half of November is the when I do expect those positivity on the market should be visible. Right now we are jumping to our wrapping up section. So there are many headwinds ahead of Amazon. One issue was the performance of the company's cloud computing division. Right now, even though Amazon Web Services is revenue growth is rising, it's still well behind the results of such companies like Microsoft and Alphabet. So AWS accounts for around 70% of Amazon's operating income, and as a result, this unit's slowing sales growth has been on my radar for some time, and something I think investors should pay attention to. Anyway, there are some macroeconomic uncertainties with this geopolitical type of problems, but it shouldn't weigh on Amazon very much. So I do find that overall there are many things aside of this AWS maybe not very satisfactory pace of growth segment. Many things that is about to get light in the company's earnings, and I'm encouraged by the growth in advertising sales and expansion of overall profit margins. Nonetheless, the stock right now doesn't look very cheap, as we do know that's options chain is skewed to the upside. Also, technical formations are pointing that we may eventually get a bit lower. That's why this around 10% sell-off from the point where we are sitting right here should be considerable. And in general, investors seem to view big tech companies as relatively low-risk investments, but it's sometimes more important not what to buy, but when you do buy it. So that's why you need to just become aware of those risks. So that's it in today's episode. Thank you very much for watching, and if you have any questions, just put it in the comment section below the video, and we are letting out another episode in the time to come. So just subscribe to the channel if you enjoyed the content. There will be many things to cover. So that's it, and bye bye.